Welcome back. We are joined today by a senior research analyst, Steve Biko, who is going to help us make sense of what's happening in the market. Karibu sana, Steve.
Thank you very much.
I understand this is your first time on Metropole TV.
Yes, and I'm actually impressed with the operation they have here.
Absolutely. We look forward to having you more often. Let's start off with car and general in the conversation. What's driving the price upwards?
I think our market has gone through a doldrum for quite a while, since pre-COVID time, basically since December 2019. And anything that touches on any listed firm is actually exciting news. So when you look at the fundamentals, there's nothing really that's actually pushing car in general to actually perform the way it's performing. So for me, I think the fact that they're having issues with KRA and everyone is talking about it is actually creating that aspect about it, and people are actually wondering, oh, so what does car in general do? What do they deal with? I mean, and how come, the KRA is demanding over 700 million in terms of back taxes up to 6 years. So for me, I think our market has been, it's been dull, it's been boring for a while. So anything exciting will create a ripple effect in the market, because you can tell that on any given day for the last 2 years, we're used to the top 5, the big boys, Safaricom, KCB, Equity, Absa, National Bank.
Yeah.
In, out. So for me, fundamentals don't really support
The
car in general moving. Though I know there's a lot, given the nature of business they deal with, 3 wheels and 4 wheels, there's a lot surrounding that particular business. A lot of legislation is being actually rolled out, like what the age of cars you can be able to import in the country. We're seeing KRA this week. They've actually been foremost in discussing the taxes around car importation and car duties.
Absolutely.
So I think
but I'm wondering, I saw somewhere that car in general is underpriced, and that apparently it's more valued than the actual price in the market. I don't know what your thoughts are about this.
Well, I would like to disagree. I think if I'm looking at the numbers, the value of car in general is actually okay, because one, the nature of business they do has actually been hit hard by COVID. We've seen global supply chain systems being disrupted. We've seen KRA actually issuing punitive tax measures against importation of cars. We've seen basically manufacturing in this country actually dropping to basically zero in terms of investment and new ventures. We are yet to actually see a car brand being manufactured and being built here like it is in South Africa. Yeah. So for me, I think the core values for car in general are okay. For me, it's actually a stock that I don't follow. It doesn't really interest me.
But why is the taxman after them?
Well, one, you need to understand that we are basically literally coming out of 2-year pandemic with COVID. We're not yet out of the woods yet, and I know KRA is under pressure from the national government and Ministry of Finance to actually collect as much as they can. And we've seen the Director General actually saying that they've launched new measures to be able to catch tax cheats. And that is why they're going after every possible brand out there. Yeah. And my issue, I think the issue between KRA and car in general goes back 6 years. And this is where the issue is. And car in general is actually wondering how KRA came up with the figure of almost 700 million, which is 76% of its last year's net profit.
Yeah.
So I think KRA is simply doing its work. I think the problem we have is the legislation. I think this is an issue that needs to go to Parliament to find better mechanisms where KRA and taxpayers cannot be able to sort the issues amicably, because we are seeing brands saying, no, this is what we owe, KRA saying, no, this is what we owe. And it's going to be interesting now. If car in general actually under the limelight, expect more brands to be under the limelight. Yeah. Because KRA is actually going back 10 years trying to look at how things have been.
I think what I heard is that KRA is interpreting the law differently from the way car in general is interpreting the law.
Not just for car in general. We've seen KRA interpreting the law based on their own understanding, based on their own.
There are other brands that are already affected by this.
Yeah, we've seen Keroche, they're in the news today. We've seen car in general. We've seen London Distillers. We've seen there are actually a couple of brands that actually are the tribunal.
So it's not a problem that is unique to Can General.
And this is what I'm saying, that as long as KRA continues interpreting the laws the way they are right now, brands will keep having a problem. And you see, at the end of the day, KRA doesn't have a problem. They're simply executing their mandate. The problem needs to go back to Parliament and the Ministry of Finance and Central Bank to actually look at how best are we able to nurture our golden gooses so that they can be able to give more, so that KRA can be able to collect more.
As opposed to just
so,
going...
in as much as we want to really say KRA is bad or KRA is actually being punitive, the issue isn't with them. The issue is with Parliament. Parliament needs to actually call all these players on the drawing board and say we need to look at the laws differently. And I know KRA has a very competent legal team, and these brands have competent legal teams, and this is where the issues are.
All right. Fair enough. But I hear one more thing. I hear that they are expecting to close the books and declare dividends for those who are within the books. I think they are closing the books next month. Is it exciting news from your side?
And that's actually one of the other things that is actually making the stock go up, because given how the last 2 years have been for a lot of brands, this is good news.
Yeah.
Any listed firm that's actually giving dividends is actually going to be very positive news. And also now that should tell you why KRA is actually very concerned with them, because the KRA has seen
because you're paying dividends and you're not paying us.
Exactly. You know, they're doing very well. I mean, despite the global challenges in business, the car business and tuk-tuk and motorcycle has actually been doing very well. Logistics has been increasing, and I think for Kenya, one of the things that's been driving logistic business is the element of devolution. People leaving Nairobi and going back to their own counties to focus, and that means you need logistics, transportation, and courier services.
All right. Let's get to Equity Bank. Equity Bank wants a piece of the insurance sector. They have already gotten a license for Equity Bank Equity Life Assurance Company of Kenya. I think it's abbreviated to ELAC. What do you make of this?
Well, Equity is it's a solid brand. We've seen their foray into Pan-African financial systems. That came as a surprise. Well, it's good for the brand in terms of perception, in terms of a more macro aspect, in terms of the brand having more value for their shareholders. I don't understand the long-term game, because given how difficult and challenging the insurance sector is in Kenya, we're looking at penetrative levels of 2.3. They're actually dropping. Many Kenyans actually pulling out in terms of paying premium insurance. Many people actually complaining about what's been happening. Yesterday we saw a list of top 50 insurance companies that don't pay their claims. So it's interesting to see why Dr. James will actually push Equity into the foray of insurance. But if I'm not wrong, because I know that they have a lot of financial products, both digital and across East Africa. So for me, I'm thinking they're trying to get into the pie of insurance so that they can be able to also protect their own investments, because they have a lot of businesses across the continent. And I think they'll want their own department to be able to overlook, instead of giving that business to a different brand.
Yes, I understand that at least 100% of all the loans that are given out by any bank in the Republic of Kenya is insured, life insured.
Yes.
So that if you took a loan and peradventure, by God's grace, you arrive to heaven before the rest of us, the bank doesn't come after your family.
No, the insurance company will.
Absolutely. So does it mean then that Equity Bank wants to make sure that they domicile this life insurance coverage of their loan book within the group?
That is one possibility. The other possibility is that there's been a silent competition between Equity and Safaricom in terms of controlling the mobile money sector. And we've seen Safaricom actually being...
Is it really a competition, dude?
Yes, it is, because we saw the products that Equity actually launched in terms of Equitel and money apps. And we see that Equity is the largest bank in terms of loan dispersions, especially through the digital platform. So there's that silent competition, and you see the partnership between Safaricom and other banks pose a challenge to Equity. So Equity has picked a sector where these other brands cannot really delve into it in terms of foray, and they're going to try and come up with innovative products. Because one of the biggest challenges in the insurance sector has been innovative products that can actually reach the common Kenyan, wherever they are. And mobile convenience is actually one of those things. And Equity has shown that it's proven they're actually very good in terms of digital performance.
They have tried their hand in Equity Health, the health insurance.
They're still
health
there.
Provision.
They've opened a couple of branches across the country.
How's that?
It's not doing badly, and we know that healthcare is actually a big challenge in this country. So Equity understands that people need loans, they need convenience of loans, so they've deployed, it's actually the most digitized bank in terms of loan portfolios, and they have experience in terms of healthcare, and now they're getting into insurance. So basically it's being able to protect their businesses, their core business, which is banking, and limiting how much money they give to third parties in terms of protecting their own business. Then secondly, trying to also have an edge against the competitors, because you see KCB as the Fuliza product, which is actually very big, because you're looking at 1.2 billion transactions per day. So this is, Equity is looking at better ways to stay ahead of the game. And given its foray into Eastern Africa, in Congo, DRC, Rwanda, they're looking at better ways to be able to protect their own interests there.
My concern, however, with this move is that isn't it going to seriously expose the bank when the bank takes the insurance business? Let me paint it this way. You have the loan book, which is supposed to be insured by an insurance company. Then the loan book is now going to be insured by a company which is owned and operated by the same bank. Aren't you not diversifying risks?
One, the insurance arm is going to be independent. So in legal terms, it's going to be an independent business covering
money terms, risk terms.
But in terms of risk, of course, any venture has its own risks. But if you look at the insurance penetration in the country, at 2.3, the risk exposed is actually very minimal. And if you look at how things are, and any data will tell you that the insurance business in the country is actually very tough. So for me, it's actually an interesting move. The question is, how serious is Dr. James in terms of pushing this? Because we've seen him launch different arms, like the investment arm of Equity that operated for 2 years, then it was shut down. So we've seen Equity launch particular products and then actually pull back from the market. So it's going to be interesting to watch. And also now, the other interesting bit is we're going to look at how bigger players in the sector are going to be doing and how they're going to respond to this. Because the issue of exposing the core books of Equity as a brand on the stock market, we're going to see what the regulators are going to say, what CMA will be able to say, what IRA is going to say. And basically, this is something that if more analysts are going to dig into it, it's too early to actually form a solid opinion on what is the agenda. But maybe in the next, at the end of this quarter, we can be able to tell, and we can be able to see exactly what was the agenda of setting up the firm.
Well, I think you are favorable towards them because I'm really still concerned about the risk exposure.
The risk exposure is
that some 7 guys called the directors of Equity Bank will still have significant influence on the insurance company that is quote unquote supposed to insure the depositors' money within the bank. There's too much conflict.
What I know is that first, I'm hopeful, not just for Equity, but for the whole economy. If our economy is going to grow at 5.6%, as World Bank said, or 5.8%, as Central Bank said, it's the issue of risk will neither be here or there, because every business has its own risk aspect. And I'm confident that KCDIC has actually looked into it and given the approval. The interesting thing is Equity has a lot of businesses pro-government. A lot of civil servant salaries actually paid through Equity. And a lot of top businesses in the country also pay through, they control a lot of SME accounts.
So it still has the tag of the government bank, even after?
It still has, and this is where they're trying to see how they can be able to take other businesses in terms of insurance from other key players like the civil service, the police, other than their own. So when you look at the element of risk, it will actually be mitigated by any additional business they'll be able to get from the civil service, the discipline forces, and the private sector.
Okay.
Yes.
Does the move to go into insurance big time have anything to do with the withdrawal of Britam from them and the purchase of the Britam shares by IFC?
Not really. We've seen a lot of musical chairs between Britam, Equity, and the founders. And there's a corporate wind change that's happening that many of us are actually not seeing it. For me, Dr. James, as the visionary leader of the brand, wants to dominate a particular sector. And the fact that they've not been able to dominate the mobile loan aspect is actually really not sitting well with him. So he's trying to see the best way to be able to insure businesses. And you see, one of the things that any business has failed to do, even if you're looking at Jubilee Insurance or any other insurance, is to penetrate the sector. And one of the key issues that's actually happening now, courtesy of COVID, is every business needs to be insured. It doesn't matter what you do, whether you own a matatu or you own an SME with 2 employees, you need to insure your business. And this is a feature that wasn't there before COVID.
But so Steve, I'm wondering, however, in the digital space, can you really dominate? I mean, Uber came up with the idea, then before they knew it, Bolt came, now there's Little Cab, and there's a whole lot of new locally made applications.
The interesting thing about it is that the entry bar for this business actually been set very high. So only very few players can actually be able to enter and dominate. And for me, I'm looking at Equity trying to see how best they can be able to drive the penetration aspect of our insurance premiums to at least 10%. Because even if they increase by 1%, that will be a third of the entire insurance business in the country, and that will mitigate any risk exposure that any analyst or any stakeholder might be able to query.
Just one more thing before we go into traditional insurance, which is I want to go into Britam. But I'm wondering, will this affect the insurance sector as a whole? Because Equity Bank is not a small player. Does it mean then that there might be mergers and acquisitions coming in the insurance sector?
It's good news because, one, if all these other companies have been struggling to go beyond 3% in terms of penetration, access to the rest of the country. We have 50 million Kenyans, and only 3% have access to insurance premiums. And of this 3%, actually 70% are just basically the disciplined forces, teachers, and the civil servants. So, of course, Equity getting into the play is going to make smaller players think of coming together. Especially, you're going to see insurance brokers amalgamating to form an insurance firm to be able to compete. We've seen a lot of, thanks to COVID, and the true effect of COVID is actually going to be felt this year. A lot of big brands in the sector are also thinking of coming together to merge so they can be able to meet the claims, because we've seen the law has been made very clear that they have to pay any COVID-related claim, and this is really hitting hard most of them. And most of them are actually issuing profit warnings for first quarter 2022. So this is a good positive aspect for the industry, and whatever innovative products that Equity is going to come up with will actually be a plus for more players to actually, for more customers to be entrenched, and this will mean more deposits and more premiums being paid out.
Yes. What do you mean that the real effect of COVID-19 will start to be felt this year?
Well, because one, we don't have data for 2021. Kenya National Bureau of Statistics hasn't released any data for 2021. The data they released towards the end of last year was for 2020. So in terms of our growth prospects, in terms of how many jobs have been created, in terms of how many people have slipped into poverty, how many people have become millionaires, billionaires, we have 2019, 2020 information. We don't have 2021. And we need the latest information to be able to tell where we are going.
Although the part of poverty, at least we got to hear wind of it, about 53% of Kenyans are now poor, up from, is it 39%?
The number is actually higher because they were just, the data released was looking at Kenyans who earn a salary using a payslip. So it didn't look at the rest of us who are in the informal sector. Just looked at civil servants, the police, and the teachers.
Let's pray that it will get much better. I want us to go into Britam Insurance so that then, because now we've moved from the banking sector into the insurance sector. But before that, I think we need to take a small break and just take a breather. When we come back, we will talk about Britam and the exit of their CEO and the drama, the boardroom drama that's going on over there.